Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I am Manisha Gupta. Let's start the show with a quick recap of what the week that was for the commodities. And the glut concerns remain for the crude oil, where we have seen a weekly and a monthly decline continue for this one. 50 has not been able to hold on for the US crude oil prices, and the decline in US crude is much more than what you have seen for Brent, and that has been after the Hurricane Harvey did damage and has shut down 1/5 of refining capacity in US. But the safe haven demand continued to support the gold and silver prices, where on a weekly and monthly basis we are trading in the positive here. Also, the US dollar has been weak. The markets are factoring in the fact that you will not see yet another interest rate hike in this year, and that has been supportive. But what takes the cake away clearly has been the metal space. The China demand has boosted this sector on the higher side. There have been supply concerns. You also have seen positive economic data, not just from China, but from Europe and US as well. And that's led to double-digit gains in last 1 month in all of those metals there. But moving on now to our main discussion, and that is on this week's Commodity Champion. It has been a stormy week for the agriculture space. Below normal and erratic rains could potentially impact farm output, dashing hopes of higher yields. This season, monsoon wreaked havoc in the second half of this month, causing floods across Bihar, Assam, Gujarat, and other cities like Bengaluru and Mumbai as well. And yet, the countrywide rainfall figures at the end of the month have a deficiency by 4% as compared to 3% in the same month last year as well. The sowing number is also lower than expected. Total area sown under kharif crops, rice, pulses, coarse cereals and oil seeds is lagging behind by 5.7 lakh hectare. So far, even as the window for planting is ongoing, the kharif season is approaching a closure. So how does the effect on the farmers? Will erratic rains have any impact on prices of pulses? Joining us to have this discussion further is Abhijit Sen, who's professor at JNU. We also are joined by B.V. Mehta, who's ED at the Solvent Extractor Association of India, and Praveen Dongre is chairman of India Pulses and Grains Association. Gentlemen, hi, thank you so much for joining us. I want to start with you, Professor Sen, and while of course the monsoon has been erratic, what is your reading as of now of the sown crop and of course the acreage numbers as well?
Well, as far as pulses are concerned, last year was a huge record. In many ways, it was an outlier. So don't expect output to be of that magnitude as the one we saw last year. As far as the rains are concerned, the situation as of now is almost exactly the same on national readings as last year. There are obviously regional variations, and there are some variations on its temporal variation. Pulses are doing better than I would have expected given the price movements which had taken place up to the beginning of the sowing season. However, there will be some losses because of excess moisture. For the other crops, I would still wait and see. Yeah, sorry?
So, no, Doctor,
for the other crops, I'd still wait and see. I think you probably will.
Go on, sir.
Sorry, go ahead. You're asking a question.
Dr. Sen, that exactly was my next question really on, while of course the sowing numbers are less than the previous year, how much of a concern is there about the yields, the productivity and of course quality? Is that a big one as according to you?
See, on that I think it's too early to say anything. And no, I mean I would really say that we're looking ahead at a harvest where we can't at this stage say a thing about rice. We can say that pulses will be a little less than last year, and oilseeds perhaps a little more. I think that's the sort of statement I would make at this point. Your other experts, if they want to come in, I think they should come in at this point, because I can then add on why I think what I'm saying.
Absolutely, sir. That's exactly what I'm going to do, getting Mr. B.V. Mehta in the conversation as well. Mr. Mehta, you heard Dr. Sen, who says that while pulses may not be as good as the previous year, oilseeds definitely have a better chance. What do you have to say on that?
If you look at the acreage data as on 24th August, the overall acreage is down by about 14 lakhs hectare. In case of soybean is about 8 lakh hectares, in a groundnut is about 5 lakh hectare. So if you go, even if a normal monsoon compared like last year, the production is bound to go down.
So as compared to previous year, where do you see the numbers, Mr. Mehta? Is it remarkably low? Is there a concern right now with the acreage numbers?
Yes, acreage number is down over 14 lakh hectares, quite low. In spite of the good monsoon, then we must look at why it has gone down. Basically, there is a shift of the acreage from the oilseed to the cotton. Mainly if you go to Gujarat or Maharashtra, is a cotton. Everywhere you find the cotton. Last year it was a groundnut. Even the castor area had gone to the groundnut, but this year is a cotton. And simple reason is farmer look at where he is getting a remunerative price or better return. Last year soybean was below MSP, groundnut was below MSP, and there was no operation from the government to purchase at the MSP. Very skeleton operation took place, and that was the reason farmers losing the interest in the oilseed crop.
Well, that's about oilseeds as well, and the concerns are plenty there. We'll of course keep discussing this, but I want to get in a word on pulses from Mr. Dongre as well, who joins us on the show. Mr. Dongre, what is your sense? How do you look at the scenario right now? Of course, our experts, the other experts have been saying on how some numbers are dismal right now, but too early perhaps to get a concern. How would you look at the sowing numbers when it comes to pulses?
Well, as you can see that, the plantings of pigeon peas are up by about 3%, moong and urad are down by about 1.5%. So we are more or less at least where we were last year, which was a much larger crop than expected. We had, so it's the plantings are there, the acreage is in the ground, but I think the spatial and temporal distribution of the monsoons is what we need to watch very closely now on, and if that does happen, then I think we should be looking for a good crop.
Mr. Dongre, if we are looking at a group crop and ample supplies, especially when we are into a festival season, would you say that there is more good news than at least for consumers here, if not so much for the farmer as an industry?
My comments would be that the government is has to play a balancing act between the consumers and the producers. They have brought some restrictions in imports as far as certain pulses are concerned to ensure that the return to the farmer is good. And at the same time, on the other side, at the retail end, they also have the responsibility to ensure that the prices remain within a certain range and availability continues. I think so far they have got it right. Prices on the raw pulses front have increased. Retail prices were anyway within a range, and we'll see some sort of correction there. So I think the festive season we should see ample supplies, and demand should match the supplies for the next quarter.
That's good news, of course, to hear. Dr. Sen, getting you back in the conversation, you've heard both our experts on their sectors. What is the sense that you're making right now? Because, we have this conversation year on year or season to season on where are the acreages, where are those prices, what is the government measure at this point in time? Because even that tends to change on a season to season basis.
Look here, we've got 3 people on your program, and there is some difference of opinion on both pulses as well as on oilseeds, as far as what I said at the outset. On the other hand, I think generally something which is coming out from what everyone is saying is that this year is a lot like last year. And last year was a very good year as far as output was concerned. It was a terrible year for the farmers as far as prices were concerned. And I think the situation at the moment is one where I wouldn't stretch my neck out beyond that. I still maintain that we are probably overestimating how good the pulses output would be on the basis of area figures, because there is excess moisture which does reduce pulses yields. And I think on the oilseed side, I'm somewhat more optimistic on the yield front.
Okay. Mr. Mehta, do you want to come in on that? Because as Dr. Sen said, it may not be such a great year, but are you expecting at least better yields even as the sowing is on the lower side?
No. If you look at the monsoon scenario, particularly Vidarbha and central part of the MP has not received enough rain, the deficit rain, and that may affect the soybean yield. And also if you look at the acreage is also down. So if you put together acreage down and the yield down, the definitely crop will be lower than last year. In case of soybean, last year the trade estimate was about 105 lakhs. This year I am expecting not more than 90 to 95 lakh tons at the moment.
But what's your sense on the government measures which have been taken in the last couple of months for many crops, especially for edible oil sector as well? Would you applaud that? Do you think that has been one supporting factor for the sector?
No, definitely the increase in duty has given a good signal to the farmers. But now increase in duty and also the increase in MSP, the government must see that farmer get a remedy price above the MSP. Now MSP, if you look at the MSP, last year farmer did not get the price and they have to sold below the MSP. This year also, though they increase the duty, the price is moved by about 200 rupees per quintal in case of soybean from 2,850 to now is at 3,050, and the future quotes also showing that the price will maintain somewhere about 3,100 to 3,200 for soybean during November, December. It's a good sign. And definitely, but again I'm repeating, the excess production of the last year has affected the farmers and they have not received the remedy price, and government's machinery was not active to purchase at MSP.
Well, that has been a concern from season to season, of course, but we'll discuss more and all of that with all our guests here on what the government really needs to do and whether or not there is enough availability, especially for the festival season. And of course, we'll get a price view as well after this very short break. Welcome back, watching Commodity Champions. While we are, of course, discussing the crop and the yields and some of the concerns, of course, according to farmers there. But Mr. Dongre, the government measures, whether it has been stock limits or tweaking export or import, while these reactions to price or availability are immediate or reactive from the government, but sometimes would you say that they outlive the purpose and get extended over seasons?
Any kind of restrictions creates price distortion. Any kind of restriction in the supply chain, right from the farmer to the retail shelf, will create price distortions, and it severely restricts the process of a natural price evolution. So you put a stock limit, say, at the farmer level, the returns to the farmers get affected. You put a stock limit at the processor level, the efficiency of processing and the efficiency in the supply chain gets severely affected. So the idea is to keep an open supply chain so that the price evolution is natural. And I think one should then look at steps of opening up exports so that what sells below the minimum support price gets processed and exports, which is providing good returns to the farmers, as well as providing some sort of a support to the milling sector. So that is one probably step that the government should seriously look up is to the opening of exports. The short-term measures, of course, in terms of putting in quantitative restrictions were probably necessary at that time, but hopefully our association has made representations and these should be lifted hopefully in the near term.
Dr. Sen, how would you react to Mr. Dongre's comments here? And of course, we spoke to the Agri-Seki as well last week, who said that they bring about these changes as they are sensitive to various sectors, and the changes or the reactions, of course, are as per the industry demands, of course, whether it is tweaking export or import duty or stock limits, etc. Looking at all the stakeholders, what is your sense? Would you say that these reactions sometimes become structural, even as they're not intended that way?
I agree entirely with what Mr. Dongre said. I would simply add the following. A, it is better to rely upon tariffs rather than on quantitative controls of any kind. So if you're going to do anything, you can actually put up the import tariff if you want to give some signal to the farmer. You can bring down the import tariff if you want to give the opposite signal in favor of consumer. But don't, for heaven's sake, play around with quantitative restrictions on exports and imports, and stay clear as far as possible from stock limits unless things are really gone over the top. Now the problem is that I think politicians and most others disagree on when things have gone over the top.
Well, your point is well taken. Mr. Mehta, do you want to add to that? Because
I'll give a classical example. Imported oil, there's no stock limit, and when the domestic producer, they are subject to the stock limit. Yeah. So your domestic farmer is subject to the stock limit. And import oil, which is a 70%, is a free. What's after stock limit? Is there time to bury the Essential Commodity Act? There is no need to have an Essential Commodity Act, a stock limit, if you want to give a real good price to the farmers.
so, Mr. Mehta, what would you say? What are the challenges as you see at this point in time? Because the government clearly has been reacting to what the industry has been putting out, and they have been reacting also to the price rise or availability of the produce.
See, the major challenge before the oilseed sector is the stagnant oilseed production. Practically, last 10 years, you see the production is about 26-28 million ton. Productivity also is a stagnant, about 900 to 2000 kg. This is a major challenge. And third challenge, rising imports. Now today we are importing about 15 million tons worth about 75,000 crore, and dependency has gone up to 70%. It's a matter of food security. Can you afford to have this luxury? So government must address all the issue concerning to oilseed sector and must focus on the productivity. One area is a GM crop. Introduction of GM crop, it can give about 20 to 30% extra productivity. Second is about the promotion of the mustard seed cultivation. That's all. And why don't divert certain area in Punjab and Haryana where we have the grains, rice or wheat? Why not switch over certain area from grain to the mustard seed? That's a possible. Maybe you may offer a higher price time being to encourage the farmers to switch over from grain to the rapeseed. So these are some of the area. And one more concern is land loss. Corporates are not allowed to buy the land. The farm holdings are so small, you cannot expect productivity. I think that also time has come to relook at the land laws of the country.
Dr. Sen, how would you react to that, and what's your sense on how much is the government really listening to all of these presentations and suggestions from the industry, and do you see all those changes coming in?
See, look here, I'm sure government is listening, and the presentations are not very different from year to year. You get some variation depending on how things are, but The basic point is the following. I think on the issue of GM crops, that's mainly got to do with soybean and potentially to do with rapeseed, which is the new GM crop, which is at the moment, being considered by the government. Now, GM crops have they become a political issue, and the government is facing opposition from, for example, the Swadeshi Jagran Manch. And so, I think this is again nothing new. I think previous governments have also faced political oppositions and have pulled back from GM crops.
Sure.
But the point I would like to make is that it's not a question of higher production. At the moment, the production is not fetching prices. So the point is that it is a question of doing something about the shifts from one crop to another crop in such a way that we can actually get a higher price. We can produce those crops or those commodities for which the market has a bigger demand. It's managing that, and managing that, I think I agree with on the oilseed side. I think we should have as an objective reducing the extent of imports. But that is an issue which has to do with relative domestic prices, both of oils as well as of meals. And I think one of the real problems with soybean is what is happening in the meals market. But I think the government can act, provided it is willing to come down and take strong action and saying that no physical controls, no quantitative restrictions, but yes, we are willing to have a tariff regime which helps the farmers.
So your point is very well taken, and that is what really needs to be done. And of course, various industry sources have been making those presentations. Final few comments from all of you. Mr. Mehta, what would you say, at least on the prices going forward from here on now? The concerns are many, and the government is, of course, reacting to a lot of that. But what is your sense on prices now with the kind of scenario we stand at?
If you look at that particular supply of edible oil, world is flooded with edible oil.
Right.
Price, so international market is not likely to go up in the near future. Maybe slightly up, but not much. You have the bump for soybean crop, you have a palm availability, reduced usage of the palm in the biodiesel, so that will also bring more pressure on the food basket.
Sure.
So overall, if you look at the price, I am not thinking the price will jump to a great extent, maybe slightly up.
And Mr. Dongre, a final comment from you as well. What is your sense on the prices going forward from here?
So I think the availability currently is quite good in India. The stocks are of some of the pulses are at record highs. So the stock availability and the arrivals on the import front are extremely good. The sowing acreage, as you know, has been good. There has been widespread rainfall throughout the pulse growing regions. So I think the supply will match demand, and I think prices will remain in a range.
So view coming in from both of our guests that prices will remain in range when it comes to pulses as well as edible oil. And Dr. Sen, thank you so much for joining us as well. And your point is very well taken that no quantitative controls is what all of these sectors need. At the most, it should be tariff that the government should be moving on. Thank you, gentlemen, so much for joining us and doing that discussion. With that, completely out of time on this edition of Commodity Champions.